Hey everyone, welcome back to What the Fintech. It's been a while since the last episode. I hope you're doing fine and thank you for listening this episode. We're starting a new season right now, and for this first episode, we're doing a roundtable focusing on cross-border payment in Asia. We have invited three guest speakers. The two first one are Michele from LianLian Global and Dave Birch, author and consultant on payment. The last one who helped me to drive this discussion will be Ian Fong from Money2020. Ian, is it possible for you to introduce our speaker for today?
I think that I think that we should actually hear from the horse's mouth. But I've worked with Dave Birch. I mean, he launched that book. I mean, it was so successful. Remember, Dave? I mean, it was like, I mean, he's a consultant for Hyperion, but he has so much. I mean, it's the experience is just it's just so over the top that I can't personally even like list all of them. But honestly speaking, I feel that he's one of the best guy to work with and so experienced, and I really enjoy your latest book. So Dave, maybe over to you, and if I've missed anything out,
Well,
you can
you're very kind, Ian. Thank you very much. And I do owe you because it was just a little idea to maybe do the book launch at Money 2020 Asia. We thought maybe the Asian market would be more interested in looking ahead, and I couldn't have imagined how successful it was going to be. I thank you for that. It was fantastic.
Yeah, but I think I have to thank you as well. I mean, you're such a fervent supporter of Money 2020 Asia. I mean, almost every month I'll see we'll have some form of social media posts on us and all that. That we really thank you for such being such an ardent supporter. So, and of course, Michelle. I mean, Michelle. I mean, that you went to our show and you had such a great time, hopefully. And I saw you, of course, in all our videos and all that. I mean, Michelle represents the MBN Global. I think you are the general manager. And for those of you who doesn't know LianLian Global, please go and look out for it. I mean, they're one of the largest, if not the largest, kind of like payment company in China, and definitely is a company that it's worth looking at seriously because they are just so you know advanced and just so good. So Michelle, over to you. If there's anything that I've missed out, sorry.
Thank you, Ian. Thank you for the kind words and thank you for having me here. We have had such a blast at Money 2020 Asia. I think everybody in the world knew that we closed the deal. We closed one of the deals at 9:30 on the day one. So it's been very fruitful, and we continue to want to work with Money 2020 to continue our success.
Oh yeah, I mean, thank you so much again for your and then we'll definitely see both of you again for our next year's show.
Yep, 100%. I'm going to be there. Yeah.
But let's look at today's topic. I think this is such an important topic, and why is it important is because also that for both of you, I'm sure you guys are aware as well. I mean, Money 2020 started in 2012, where it is started by two payment guys basically, and a lot of people still think that we are, or in fact, we are the number one show in cross-border payment. So, and because of that all our experience since 2012. So today's topic, I think, Medhy, we are going to understand a little bit more about cross-border and
Exactly.
yeah.
Yeah. The Asian region is very, fragmented in terms of different currencies. Each country has its own currency and central bank as well. It's very different from Europe or USA. So one of the questions that I would like to raise, maybe we saw it already in May 2020, and we will deep dive next year as well on it. It's about the current landscape of the cross-border payment in Asia. Could you maybe share a bit more what you think about it and describe the current landscape? Maybe we can start with you, Michele.
Okay. At the moment, what we could see is there is the traditional way to do the cross-border payment in Asia, and also we do see a lot of the emerging countries like Vietnam and even beyond Asia, like in Africa, the emerging markets, they all want to work together in to pay into Asia. So what we actually see right now is the trend of having the importance of having real-time payments and also digitization in this world as well. And also with the changes in the regulation, in the compliance level, we do see a lot of changes where different companies are trying to work and advance and to change their own system, their own compliance regulatory framework to fit the countries, to fit into this payment sectors at the moment.
Okay, thank you very much. Dave, do you have another point of view, or do you want to supplement on this one?
Look, I would say you have to look at the big picture around this to have some understanding where it's going. Broadly speaking, there are two ways that a buyer in one country and a seller in another country can work out payments. There's broadly speaking only two ways that can happen. It can either go through the banks, with the conventional way of doing it, or it can go around the banks over the internet in some way. And I think we see developments in both of those, which are beginning to show us at least a medium-term future emerging. So when it comes to sending things through the banks, there are already more of, people complain about the costs all the time, but actually the costs are coming down. If you look at the volume adjusted averages, they're sort of falling. Yes, there are certain corridors where the costs are still too high, but actually, to be fair to the banks, those costs are coming down. And you have things like Swift GPI, so you're beginning to see faster. I can't remember the number off the top of my head, but I think 80-90% of payments already go through GPI, something like that. So you do see things improving, but there are some issues with costs and blah blah blah. When it comes to going around the banks and perhaps using the internet to solve some of these problems, a lot of the focus historically was on cryptocurrency as a way to solve this. I think it's clear now that because of the regulatory issues involved with cryptocurrency, and the fact is, a lot of cryptocurrency is involved in, some inappropriate, reckless behavior, speculation, pump and dump, and actually outright criminality. And we all want to live in a society. We don't want to live in the Wild West. We're seeing a focus there shift. And my opinions are irrelevant about this. The numbers tell you the story, which is stablecoins is the growth area. So if you had to put me on the spot and say, if we're looking at a 3 to 5 year strategy, where should we be focusing? I would say you have those two areas. You have bringing down the costs on the banking side. That has a lot to do with reducing the cost of compliance, by the way. It's not much to do with reducing the cost of payments. The cost of the payments is already low, but we do need to find ways to reduce the compliance costs around it. This is the KYC, KYB, and this all comes, you'll be bored with me saying this, Ian, but this all comes back to digital identity again, because we need progress on the digital identity side to reduce those costs. On the stablecoin side, I think you need improvements in usability, UX and CX to make that work for people. You need integration, but actually you're already seeing that. Stripe already just paid gazillions of dollars to bring stablecoins into its stable, if you like. You'll see more of those developments as time goes on. So I don't know you can predict the future perfectly, but I hope Michele would agree that if you're looking at the sort of 3 to 5 year, we can roughly see optimism and improvement.
Ian, do you want to jump in?
Yeah, definitely. Through my conversation with quite a few of the key stakeholders, earlier this year, and I actually echo what both Michele and Dave mentioned just now. But what I would like also to add is that I think there are a lot of the current sort of cross-border payment system. There's so many different types of sending money across border. So, but one of such that that a lot of governments, especially in ASEAN, that it's working really closely together, which I term as regulatory harmonization, is those bilateral or trilateral kind of like relationships that build the real-time gross settlement systems, like the Singapore PayNow with Thailand's PromptPay, and that it's already going quite in its maturity, and of course people are starting to use it. But also the other thing is I would also like to add that whole Project Nexus, which it came about because, of course, this is an initiative by the Bank for International Settlements, and this is to integrate those internet instant payment system where because there is currently at this moment there's the absence of a unified cross-border payment system. So, and that, of course, it involves like several central banks, like the Philippine central banks, the Singapore central bank, and of course Bank of Thailand, and I think India just joined recently, and Bank of Indonesia as well as a special observer. So I think that it's something that, and echoing what Dave mentioned just now about stable coins, if you look at even in the Philippines, Coins PH, which is one of the regulated digital asset exchange, one of the largest in the Philippines, have just recently launched a stable coin, which is a pesos bag. I think what it's for me interesting is that who will be the Asia kind of hero in terms of the stable coin, or a stable coin that is backed by an Asian currency, because a lot of times when we talk about stable coins, people normally use, of course, the usual suspect, which is USDT or USDC. So I think this is an area that something that we can really look at and see whether, together with the central bank, this pesos backed stable coins, how far is it going to help financial inclusion and help cross-border money transfer? As you all are aware that a lot of Filipinos work abroad as nurses or even as school kind of helpers. So, and I think finally, I also want to mention that the regulators, back to regulators, is that I just attended recently the Securities Commission Fintech Summit in Malaysia. And what happened is that it is kind of interesting that how they outrightly say that they are embracing a listening culture. What it means is that they are actually asking all the private sector to have meetings with them, to write to them, and because to them this is how, if let's say currently whatever solutions that they're providing don't have that specific license, they are even willing to explore new and specialized license to support these innovative solutions. So I just feel that there's a lot of going on in Asia, especially, but honestly speaking, it's really, really an exciting time.
Excellent, excellent. Thank you very much. Michelle, everyone spoke about the cross-border methods right now, except you at the very beginning. Maybe you would like to touch it a bit.
Yeah. So at the moment, we've touched upon several, like the real-time payment, and then we have the SWIFT, and also fintech solutions. We have the stablecoin solutions at the moment as the cross-border payment methods. So obviously, what we are all trying to strive for is quick, the speed, efficiency, the transparency, and the cost efficiency as well. So this is something that's becoming more important, and also safety. The compliance level, the data security level, that's something that we need to improve and continue to improve, and to evolve in order to either to facilitate a more efficient payment or to bring the emerging markets closer to home.
Okay, very good, very good, very good. Maybe I can go back to you, Dave, and ask you a question about what emerging trends, except cryptocurrencies or CBDCs, do you see shaping the next decade of cross-border payment?
So can I just make one point following on from Michelle?
Of course, of
So,
course.
so when we have the rising demand for cross-border payments, it obviously should see a reduction. Like as volumes go up, you should see a reduction in costs. But actually, we're not seeing that because the costs of compliance are going up. So Michelle is absolutely right that we have to have the safety and security in place for consumers and businesses to be able to trade confidently with each other. I mean, where I feel a little negative, I feel like the current structures around KYC, AML, CTF, these are inefficient to the point of unsustainability. It means if new competitors, somebody could have a brilliant idea for a new way of doing cross-border payments, and they'll find 95% of their budget is going on compliance and KYC. This isn't the way to get more competition. And so Michele is absolutely right. We need better solutions for safety and security. I think it might mean we need to start thinking a little bit differently from the current way of doing things. And an obvious way of doing that, Medhy, when you say what are the new technologies, well, of course, the new technology that we can't ignore is AI. And the fact that AI might actually be a way, I'll give you an example of what I mean. At the moment, we monitor transactions and we look for exceptions, violations of one kind or another, according to rules that we've created. And obviously there are machine learning solutions there that help us. But actually, if you imagine that we could take, if we were doing this properly, if we could take all of the data from all of the transactions and give it to AI to spot patterns that we can't spot, not using rules that we've created, but I mean, I think this could be a new, not that, we file the suspicious transaction reports and then they forget all of that, just give all of the data to the AI and let it look for the patterns. And that might, and in fact, I mean, I don't want to be controversial, but you could argue, maybe you don't need to do the KYC either, because if you can capture all of the transactions and find the patterns and spot the bad guys, that's actually much cheaper and more efficient than trying to gate the system as a whole. So I just wanted to back up what Michele was saying there. We need more safety and security, but we can't do it the way we're doing it now. So to come back to the issue about technologies, I mean, I would say there are probably 4 areas that I would, if I was looking at a 3 to 5 year strategic plan in this space, there's probably 4 technology areas which I would want included in that plan. The first one is obvious, it's AI. Nobody can have a plan that doesn't have AI in it at the moment. And in particular, I think the plan would have to recognize in that 5-year horizon, a lot of the transactions that we'll be dealing with actually won't be involving people at all. There'll be transactions between AIs doing this. And the reason for this, I don't want to be the person to tell Michele this, but actually payments are quite boring. And as a person, I don't really want to do it. And so when I'm buying some shareware from somebody and am I going to do this using PayPal, or should I send them stable coins, or should I use my MasterCard, or maybe just the instant payment stuff? I don't want to think about any of that. It's so boring. I mean, I'm bored even telling you about it. Look how bored Michele is, and she's just listening to me telling her about it. That's the kind of stuff that bots, I'll be very disappointed if bots aren't doing that in 5 years' time. I just want to say, send $25 to Michele, and then I never want to hear anything about it again. I just want the machines to do that. So AI is the dominant one. The second thing is, and Ian knows I'm going to say this, the second thing is the whole kind of digital identity and trust area. We need better solutions for KYC on a global scale. We also need KYB, your business solutions. Those are, in order to LEI doesn't take us far enough. We need know your business solutions. Pretty soon we're going to need KYA, know your agent solutions, because it'll be bots that are doing it. So we need a much better digital identity infrastructure. And we see movements towards this. If you look at what's going on in Australia and New Zealand with this kind of more framework-based approach, mobile driving licenses, this kind of stuff. The third thing, and this goes back to last year, Ian, is the whole kind of issue of the metaverse, spatial computing. You probably saw those glasses that Meta launched a couple of weeks ago, the new AI-powered smart glasses. I think that stuff's going to be huge, because that's where the next generation of consumers are. You're talking about the 5-year horizon. The kids, if you're looking at that kind of 11 to 14 age group, they're already in Fortnite, Minecraft, Roblox. I mean, that's where they interact with people and so on. So I think we have to have strategies for that. And then the fourth one, and I'm probably the 1 millionth person that's said this, is we have to have strategies around quantum computing in place, because we don't know when Y2Q is going to come. With Y2K, we knew when it was going to come, we could plan for it. And I would say for the payments industry, it was an incredible success. It was an amazing success because nothing happened. Nobody noticed Y2K because we did such a good job of planning, executing, upgrading. But Y2Q, we don't know. That could be tomorrow. It could be in 20 years' time. We don't know. So we have to have strategies in place. Vitalik Buterin has a nice phrase. He says there's going to be a quantum emergency, and I think that's an interesting way of thinking about it. So I know that's kind of more in the back office, but it has to be part of the strategy. So those are probably it's a long way of answering Medhy's question, but I think those are probably the 4 areas that I would prioritize in the strategy.
Thank you, Dave. I just want to see if Ian, you would like to chip in
Yeah.
here.
I mean, again, this is based on my just a few, I think a month ago, or in probably slightly more, about 2 months ago, when I was in Cambodia attending the Fintech Summit. Madam Chia Suri, or should we call her Dr. Chia Suri, who's the governor of the National Bank, which is the central bank of Cambodia, was mentioning that I want to echo what Dave mentioned just now about biometrics, because it's that she actually specifically said that they are looking into and working internally and also with external stakeholders, and they are working on a payment system where when customers can actually simply just smile, and that's her exact word, and I'm not paraphrasing it, at the camera to complete transactions. So I think even countries, emerging markets like Cambodia, which is such a progressive central bank, are already looking into such things. So that's one thing. But I think the other thing on biometrics, I think about 2 weeks ago, probably you guys have heard of that. Visa actually partners with Tencent, and basically Tencent has this technology which is palm technology. Apparently, it's just so amazing that all the what they call you can just use your palm for a checkout experience. So what happened is that this Tencent will work with all these vendors, and all we have to do is just as a consumer, we just have to go there, and for the first time, we just pay with our credit card, but also use our palm to scan once. So, and in the future, where we go to that vendor to purchase something, all we have to do is just to wave. And when we wave and we make the payments as well. So I think this is just going to be just so exciting, especially. And of course, they are trialing with banks like UOB, DBS, and OCBC in Singapore. So again, this is something that it's exciting. But I also feel that the other technology, which I agree, of course, everyone said that it's AI. And AI definitely will play a very, very important role. But I realize that in Asia, especially from my experience going to all these, especially for the emerging markets, a lot of them says that at the moment, while AI is such a big trend and all that, but is it really, really necessary to spend the resource where the current system still works, especially for the domestic market? So a lot of times that while they echoed that, it's while AI is something that definitely is going to change the world, but there is always a time and a place for everything. And, I just want to sort of put that across. Yeah.
Now you can understand the central bank's views about that, because obviously if you're looking at high level from their point of view, almost all transactions are domestic. I mean, I don't have the figures in front of me. I couldn't tell you what proportion of Cambodian transactions are cross border, but it's small.
Yeah.
And so from the central bank's point of view, they need to focus on improving the overall payment system, and that means focusing on domestic things. But
Yeah.
for the cross border stuff, when you start looking at what we could do if we had those kind of more safe, secure infrastructures in place, I personally think if you come from the school of thought which says trade is the basis of prosperity, and if we can make it easier for people to trade internationally, everybody gets richer, which I do come from that, then I think there's a priority to those. I can see the focus on domestic, absolutely, but for the economy as a whole, there needs to be more work done on improving the cross-border flows, because that's how we all get richer.
Yeah, Dave, I totally agree with you, but it's not just about Cambodia. I mean, like emerging markets like Philippines, for example, why are they, using stable coins and working with the central bank to actually do this? Because it is true that a lot of Filipinos are working within Southeast Asian countries, as I mentioned, with like nurses or even home health,
Yeah.
right? But the other thing, Thai as well, there are a lot of Thai people and Vietnamese people who actually come to Singapore and the neighboring countries like Hong Kong and all that, and they want to help them. I mean, they are citizens, okay, to be able to transfer money back. There's always this saying, when I was talking to some of the Filipino fintech stakeholders there, they were saying that Filipinos have abroad have to work 13 months every year. And the reason is because that it used to be, and of course now it's beginning to look a lot better because of better and more cost-effective cross-border kind of like payment system. They used to have to work 13 months because 1 month is actually the cost of transferring money back there, back to their home. So again, here I agree with you while they look at the domestic markets, but it really depends on which emerging markets we are talking about. So and yeah, and the Philippines and Indonesians as well. You know, a lot of them are in Malaysia and Singapore.
Let me ask you and Michelle a more pointed question. If some of this thinking about stablecoins is right, and actually for many people, especially at smaller, it might be better for them to use stablecoins than to go through the banking system. Let's just suppose that's true. I think the average Indonesian working in Singapore, the average Thai working in Bahrain, the average Filipino working in the UK, given the choice, they would use US dollars. They wouldn't use electronic rupiah or electronic baht or whatever. Most people in most of the world, most of the time, if they were given a completely free choice, actually they would use dollars. And that has interesting implications for the domestic economies in those countries that you're talking about.
Yeah, if I could chime into that, I think what Dave said is correct. And also, when we talk about the biometrics, actually in China they're using face as well to pay. So your facial expression, you could do a payment, but also it's only for domestic payments at the moment. I don't think it's because of the technology, but I think it's more about compliance issues and data security more than anything else. And then in terms of AI, we actually at LianLian, we are already using AI to do our transmonitoring and also machine learning so that they could learn about the pattern, the pay pattern, the payment patterns, and or the transaction patterns as well. So in terms of how we do KYC, it's still we're trying to improve, but we do put a lot of resources in AI and machine learning as well to lower the cost of KYC and all the compliance costs. And also, in regards to stable coin and US dollars, yes, obviously a lot of the countries will want to use US dollars, but there are a lot of trade B2B based transactions. Even stable coin aside, in terms of currencies, they want CNY because they are all paying to China. So this is something that we should also look at. Obviously, at the moment, China is still, we could be talking about CBDC, ECNY, but how about stablecoin in Hong Kong? This is a regulated space right now. So we are going to regulate stablecoin issuing, and Hong Kong dollar is obviously pegged to US dollars. So there is minimum fluctuation in currency in FX. So these are something that we should also look at. And everywhere we go, and also making everyone, all the countries, all these people richer. It's something that we strive to do as well. The amount of micro SMEs in Africa trying to purchase goods in China to sell in their local countries is huge. But they still could not settle that payment there. They are still doing group buys locally in China where when they receive the goods, it's not what they wanted. The cost is high, the FX is high, security problems, getting scams, etc. So how do we use stablecoin or other methods like what we're doing right now? Stablecoin aside, Web3 aside, we're doing netting. We leverage all our 65 licenses globally to bring the world closer. So we do netting across countries using our licenses and also obviously our license to pay to China for them. So they do not have to go through all these difficult channels because a lot of people they don't even have enough US dollars.
Yeah.
uh,
Yeah.
obviously from their local currencies to US dollar to CNY, that would be double conversion. It will be that they lose a lot of FX in there as
You know,
well.
it's completely logical, Michelle. If you think if you're a farmer in Africa and you buy your tractor from China and you buy your fertilizer from China and then you're selling whatever it is they make in Africa, soybeans or something, to China, why do you want to go from the local currency to US dollars to US dollars at the far end, back into CMY, and then back to your currency when they're giving you refunds and things? You're absolutely right. It makes complete sense just to do everything in CNY. And actually, the idea of ECNY as a kind of single currency for the Belt and Road is not a crazy idea at all. That makes sense in a lot of ways. I want to say one thing about the face recognition. I mean, you can cut this out if you like, but my favorite clipping from the South China Morning Post, I have a clipping from the South China Morning Post of, and this is China. So a lady who went to have cosmetic surgery for her nose. She went to have an operation on her nose, and she couldn't log into her bank account after this. She couldn't get into her.
Yeah.
Face has some issues. It's like
Palm is still
If I
better.
could
palm
if
is
I could
better.
chime in with that, I had a crazy story when I turned my hair from black to brown. I had to redo my ID card. I couldn't get through the face
Oh,
recognition
yeah.
at the Hong Kong airport.
Oh
Yeah,
yeah.
I got stuck. Yes,
Wow.
So
just the hair
there's many
color. I
ways.
didn't realize it.
There's many ways palm is better.
Oh my God.
And actually,
So
I know about Palm because of Amazon One. Because Amazon One have Palm scamming deployed in the US, very popular at sports stadiums in particular. But one of the reasons why people liked it in retail, I mean, we as professionals, we might have some issues about where are the templates stored and how secure are they and all that sort of thing. To customers, it was only about convenience. And the reason was because if you did your Palm scan, you were paying, but you were also doing your loyalty card at the same time. So you didn't have to take out your loyalty card and scan it and show it, and then take out your payment. You just do the Palm, and it does, payments and loyalty and offers and coupons all in one, and that's very attractive to consumers.
You know,
Yeah.
Michelle, I mean, my personal experience when I went to Hangzhou last December was like, and at that time it was just launched, not, quite, I mean, just before I went, was that, you can actually use the WeChat Pay or Alipay. And what happened is that we just have to sort of like upload our credit card, our Visa or MasterCard. And you know what, honestly speaking, it was just so easy when I was in China, and it was definitely easier when the last time I went there, so that I can just make any payments. And I still remember that there was this the hotel that I was staying, and then outside there was this lady who was like selling strawberries, but she doesn't have a stall. She only had like two boxes left, and it was so cold. And I remember that time was like it was snowing, and snowing in Hangzhou is like crazy because it's like Hangzhou normally doesn't snow, so it was like really really cold. And then I sort of like, okay, maybe I'll just purchase from her. And I went to her, I said, how much is it and all that, and then and of course then she said, oh, how much. And then I'm like, okay, I'll just buy back from the two boxes from you. And guess what, when I said I wanted to sort of like pay her in cash because she doesn't have a shop and all that, she says that, oh, can you just scan my QR code and make the payment? So that's just how amazing that even people
Yes.
selling on the road without a shop, and
That
they just say that's
that
my QR
changed.
code.
Yeah, that changed very quickly, and because I remember the first Money 2020 China I went to,
Mm.
it was absolute hassle because you needed Alipay to do anything,
Yeah,
and you could. And so what we had to do was we had to give cash to friends there, and
yeah,
they would then transfer us the WeChat value.
yeah,
When I went to Money 2020 Shanghai, and actually we went to on that visit to Hangzhou as well, which was lovely, by the way. That had already changed. You could already use a UK card to
yeah.
fund your Alipay account then, and it made life so much easier.
So
I
much.
remember buying toffee apples just at the side of the road.
Yeah.
Even buying a toffee apple at the side of the road, it was Alipay. No one was interested in cash. It's just a hassle for them because if so few people use it, if you collect some cash, you've then got to go and take it and deposit it in the bank
Of
or
course.
put it in a locked box or find some security or something like that. It's just turned into a hassle really quickly.
Yeah, and
Actually, it's
Yeah.
quite funny. Yeah, I was just saying it's quite funny because I remember 2016 I went to Shenzhen for an event there, and I saw some homeless using QR code for donation. But last weekend, for example, I was in Japan, and they're still very cash oriented, and they don't use
Yeah,
that
yeah,
QR code or even payment on cards. So
Yeah.
many times I had to go to an ATM to just withdraw money and just to pay my bills on some restaurant or bars.
Yes, it's the same with Korea as well. When I went, it was just a few months ago when we went to Korea. Before that, we Googled it. It says it's a cashless city in Seoul. So I didn't have any Korean won with me, obviously. And when we tried to take the underground, the MTR, um, it's asking me for the card, and so I tried to purchase a card. It's asking me for a cash to buy the card. And then somehow we went to a convenience store. We finally got to them to get to purchase. We finally got to buy the card with a credit card. But then you need cash to top up. So when we went to the station and we said we can top it up, and they said, "Oh, we just go." And we just went for free, and we just jumped. So it freaked everybody out. But it actually it all comes back to convenience and security.
Yep.
Because there were also story in China when payments are so convenient and people have these NFC machines, and they could go past you and they could actually take the money out already.
Yeah,
So how do we mitigate that? It's also something that we have to consider.
we we had those scare stories in London as well. You know, that supposedly gangs of Eastern Europeans were going around with card readers and scanning the cards that were in people's pockets. I mean, this wasn't true. This never happened, but it was the kind of scare. It was like people eating pets in America. I mean, it never really happened. But also, it's not a very good. No, but you know what I mean? Like these stories get going, but it's really not a very good crime because if you want to steal money from my Mastercard, you got to have a merchant account. So it's not like it's it's a great crime. You'll get away with all the money because I'll know exactly who took the money. I've got the merchant account, and so I don't think that's a realistic. But it's interesting how that story spreads. You know,
Actually,
Medhy,
we saw some demos with using the card reader. And also in terms of there are a lot of scams right now across the world, like especially in Hong Kong where tons of scams. And you'll be surprised when these scammers always give you an account or an account to deposit, and these accounts were never shut down. People are not arrested. So this is something. It comes back to compliance level. How do we stop these in order to, because then banks get freaked out as well. Merchants get freaked out. Everybody gets freaked out when
it's
they
all
do a
about
payment.
digital identity. If I'm in the UK and I'm sending money to somebody in Hong Kong, I shouldn't be sending money to a bank account routing code, an account number, and whatever. I should be sending money from a digital identity to another digital identity. It should be absolutely straightforward as that. And I think, you know, in a way, if we made a bit of an effort, because I think a lot of people in banking and finance, myself included, you know, we've been waiting for governments to do something about getting digital identity systems into place. You know, we've just had the national payments vision released in the UK, which has a whole page about digital identity in it. But I wonder if maybe we should forget about governments fixing the problem and just start thinking about fixing it ourselves. Banks have already done the KYC on people. They just haven't found a way to monetize that regulatory responsibility. And it could be that actually banks could provide the digital ID infrastructure themselves without waiting for governments to do it. So, I mean, maybe that's a pipe dream. I don't know, but we've got to reduce the costs, and reducing the costs is not about payments. The payments are already super efficient. It's the other stuff.
yeah.
So maybe we can move on to the next part of this discussion because I think we just have a few minutes left, and everything about this discussion is about like crystal ball gazing. So we spoke about like new technologies, we spoke about new way of doing payment. How do you see the payments or the cross-border payments in 2, 5, and 10 years from now? As I know we mentioned about CBDCs, we mentioned about Gen AI, but do you see any specific trends coming on, or unified system, multiple system to continue to coexist together?
I think I'm beginning to change my mind about this because I'm beginning to think that actually central bank digital currency and central bank digital stable coins are actually two different things that have different design principles. The goals of a digital currency are to do with other sort of national improvements in net welfare, to improve inclusion, innovation, competitiveness, this kind of thing. That's different from the goals of a stable coin, which is just to facilitate the efficient payment. So I wonder if you begin to look at that 10-year horizon, actually, we'll see both things. We'll see, dollar and sterling and yen and CNY stable coins in very widespread use, because that turns out to be the cheapest way of doing things once you have the digital identity system in place. And you'll have CBDCs in place, but with slightly different goals. Now, when people go to a shop and pay for something, I don't think they'll know. I don't think they'll know what they'll use. I think you walk out of the store, the phone says you owe $22.12. You hit OK with your thumb or your face or whatever. And how that money actually goes from one place to another, I don't think you'll know. I don't think you'll care. It might go over instant payment rails. It might go, via CBDC. It might be stable coins. It might be some combination. But, as a consumer, like, why would you care?
I do agree with you. I think like the consumer just try to find the easier ways to do it and the less click possible there. But
It's
Michelle,
our it's our job as the industry to make those payments safe and secure. At the moment, we put all that work on the consumer. The consumer has to work out, is this a real account? Is this a real payment? Did this really come from Bank of China? The customer has to do that, and that's wrong. We need to do that as the
Mhm.
industry.
very good.
Yeah.
Michelle, do you have any other views, or do you want to supplement on this?
Yeah, I think moving forward, the Web3 aside, I think right now we're already doing it. Like in Hong Kong, the FPS payment is integrated with PromptPay, so people could use the FPS in Thailand. So I think this trend is just going to continue to move forward to Singapore, elsewhere. So all the countries will work together on these payments. So to enhance these payment and make it easier for everybody. So what you will not need all these wallets when you travel around the globe. You will only be using your own bank account, and then that's good to go. It's migrated into it's being combined together, and then and also obviously stablecoin would be still the efficient way for us, the payment companies, to use to help the less fortunate, well, I shouldn't say that, but less developed countries to help them with payments, to be able to facilitate the payments into China, into elsewhere. And also in terms of CBDC, I think that is going to be more in 5-10 years time. Stablecoin would be closer. We're starting now. CBDC could be the next phase after stablecoin. It's more broadly used in that sense.
Okay, thank you very much. Ian, do you want to jump in for last few words?
Very, very quickly, I agree with Michelle. I think the whole global payment networks, I think, will become more interconnected. I mean, currently we are seeing a lot of bilateral kind of like interconnected payment networks, like PromptPay with PayNow and so on and so forth. But I think that there will be more interconnected in that. So I totally agree. But the other thing also, I just want to mention about stable coins is just like how we used to use cash. I think a lot of times when, let's say, just to give you an example, if it's a Filipino who works in Singapore And if they want to transfer money back to the Philippines, they can now, of course, trialing the stablecoin, they can actually purchase or use the pesos back stablecoin. And I think one, they will not, and I don't think that they will rather choose this than, of course, in paying US dollars or whatever because of the currency conversion. And with that, then of course, that currency conversion is something that we have to seriously think about because ultimately that is where a lot of the fees or the money that goes into it without being transferred to their loved ones. So I think it really depends on each market. I think each market will still have their own kind of like way of doing cross-border transfer as long as it works for them and as long as it's cost effective. And I think finally, I just want to mention this. There will be this whole kind of AI-powered solution, which I think more and more AI use cases that you will be able to see either to streamline processes or what they've mentioned to detect fraud or improve customer experience or even like personalization or AI-powered personalization that that can tailor payment experience to individual needs and preferences. So, and one final kind of like example where how regulators are just so not just, I mean, they're emerging markets and of course they are a bit more insular and look at domestic market, but Cambodia has just launched a tourist app together with a MasterCard, just like China. So this time around, when I went to Cambodia, I was also very surprised because nobody uses cash anymore. So now what happened is tourists can download this app and they can actually put their MasterCard inside and then they are able to spend the money in Cambodia without using cash. So yeah, I just want to end that.
Perfect. I think we are right on time for the conclusion of this episode. Thank you, Dave. Thank you,
Thank you.
Michelle. And thank you,
Andy.
Ian, for supporting me for this episode.
No, it's fine.
Bye,
Thank you.
guys.
Thank you, Medhy.